whether just good enough earnings, which begin in just a couple of days, will be good enough to send stocks into a year-ending run-up. Let's ask Dan Greenhaus, Solus Alternative Asset Management's chief strategist. He is with me once again at Post 9. So rates have largely been cooperating in the past few days. Will earnings?
Yeah, I mean, I think the answer is yes. I think this idea that earnings just need to be satisfactory or not is sort of secondary to the yield story, which you just brought up. And what I mean by that is pretty clearly you've seen a relationship between the two since the end of July. You had the Bank of Japan.
Rates and stocks.
Rates and stocks.
Yeah.
You had the Bank of Japan, and then you had the supply worries all hit at the same time at the end of the month. That was essentially the peak in the stock market. We've traded down ever since. And in the last few sessions, as rates have come off the boil, markets, equity markets have begun to rally again. I don't think this is saying anything everybody doesn't know, but it does underscore that right now that's the important part.
So rates are the beginning, middle, and the end of the story for equities, at least in the near term, even if equities, earnings, I mean, what was that? I think it was Barclays today used that word satisfactory.
Sure.
It's just satisfactory earnings were going to be good enough.
Yeah, and listen, I think this is a yield story right now. Obviously, something more terrible in the Middle East notwithstanding.
Sure.
But listen, earnings are going to be fine, whether they're down 1% or up 3%. We're coming out of the earnings recession, and that theme is probably going to be validated.
Boy, if ever a Fed minutes seem to not matter so much,
sure,
this would be that moment, wouldn't it? I mean, they came out within the last hour or so. The majority judged one more hike, likely appropriate. Some judged no further hikes would be warranted. Well, do you know what the 10-year was, the date of the last Fed meeting on September the 20th?
No, tell me.
The 10-year was 437. So do you know what the 10-year was this past Friday? It was 479. In other words, you had a 42 bip jump in the 10-year. The bond market has done a lot of work for the Fed to the point where you've had almost every Fed speaker who's come out lately suggest, you know what, we probably don't have to do any more as a result of what's taken place with yields. Not everybody. Some who have spoken are not voting members. That's critical to keep important. We don't know where the chair himself lies. We're going to go into a quiet period coming up soon ahead of the next meeting. But how do you sort of see where we are today relative to where we were on the question of rates and what the Fed may or may not do?
Yeah, listen, I would take issue with one word that you used, which was probably. We're probably not going to do anything. I would swap out possibly not going to do anything.
You're probably better. I think you're better saying that than I was in the word that I used.
But the point is the same.
Yeah.
Maybe I'm being a little too nitpicky here.
No, I think it's more accurate, actually.
But listen, I think the speeches have been on balance, in general, have been of the idea that we're at the end of this thing. Whether there's one more hike or not, or two more hikes or not, you're at the end of this, whether it's a month or not ahead. But to the point, I think Lori Logan's speech, the president of the Federal Reserve Bank of Dallas, her speech is getting a lot of attention, and rightfully so, because she's explaining why we're probably at the end of this and why the move in yields gives, in some Fed members' minds, room to not do more. And I think it's important for everybody to read that speech and understand where some of these people are coming from. Logan is not unfamiliar with this topic and monetary policy. She's not anyway. But yes, I think you're towards the end of this thing. Mm-hmm. You're coming out of the earnings recession and getting back to the original question that we posed at the outset. Are we going to rally into year end? When you put this together, again, something notwithstanding in the Middle East, the bias is probably there for the upside into year end.
Okay, so the bias is there because there is a good debate right now as to whether the market's primed for a year-end run, partly due to rates coming down,
sure,
mispositioning, if you want to describe it that way, and the earnings story actually being decent enough to take you into the end of the year.
Yeah, listen,
makes sense?
Yeah, no, I think so. The earnings story, again, you're coming out of the earnings recession, if you will, and whether you're up 3 or down 2 is besides the point. The commentary is what's going to matter about the consumer. Obviously, the banks go first, and there is a lot of consternation about net interest margins and losses in various books, HTM, AFS, et cetera, and that's going to be a problem for the banks at the outset. But when you get into the industrial names, when you get into the consumer names, I think the bias is probably to the upside. If anything, we're going to be looking for commentary on Ozempic and how this is completely reorienting, despite not being prescribed to anybody outside of the Upper East in L.A., is completely reorienting the economy.